Hello, everyone. So I hope you all are doing good and making profits from the market. So what I'm going to share today is I'm going to share a trade review that I took on last Friday. It was a good trade, a short trade. So I've decided to, share this with you all so that you can also, learn that how to read the price action and how to read the candlesticks in the live market. And I'm sure this is going to be pretty interesting for you. So first of all, let's see how did I build this scenario. What did I, what all things I analyzed before taking the trade. And then I will tell you that where did I take the entry and where did I exit from the trade. So on last Friday, this was the candle. Let's just use the pen. So this was the candle, and from the daily time frame, we know that prices are near the resistance. We have the downward pointing 20 MA. So just based on this scenario, what is happening in the daily time frame, I made my mind that I'm not interested in taking the long trades, at least on Friday, because we are near the resistance. And so maybe prices open bullishly, but they can turn to downside anytime. So this was the first thing that I decided in the morning, that I will take only the short trades because prices are near the resistance. Then I jump onto the hourly time frame. So this is the hourly time frame, and this was the first candle here. Let's just a little bit enlarge it. Yeah. So this was the first candle of the day. And in the first hour, we saw the reaction, right? Prices opened somewhere here, they made the high, but as soon as they reached to this resistance zone, sellers became active and prices moved to the downside, right? So it kind of given me the indication that my analysis is somewhat going in the right direction, and taking or considering the short trades would be the better idea for the day. So this is what this is how I build this scenario. Now let's just move on to the 5-minute time frame, because this is where we take the trades. Let's just clean this. Okay. So this is the first candle of the day, right? Then we have the next bullish candle. Now, if you just look at these two candles, it kind of created the trap in the morning itself, because you first have the bottoming tail bar, right? So bottoming tail bar, and if you've been watching my videos continuously, I have mentioned you, right? I have shared that bottoming tail means that uh, they are sort of creating the support zone, because when this bar was under the formation, there was a time when prices are below here, and it was a complete red candle. But then buyers stepped up and they took prices all the way to the up, making it a bottoming tail or a BT, right? So this means that they kind of created a support zone here, and then the next bar was pretty strong bar. However, as soon as we just saw in the hourly time frame, it reached to the resistance zone. The sellers came and they took the prices down. So now what I did was I waited for, first of all, I waited for the right opportunity, because as I have mentioned that, and as you can see in my daily time frame, that no pattern, no trade, right? So this means that first of all, I want a strong pattern to either go short or long. So the first thing that I, after analyzing the whole scenario, the first thing that I look for is the right pattern. So I waited for the right pattern. So, prices move up, then the reaction from the sellers came. They took the prices down, right? And as soon as prices reach to this support zone, which the buyers created in the morning itself, we have this green bar, and then the next bar was kind of a failure bar, because this bottoming tail bar, and then it has a follow through bar which was a strong green bar. The expectation was that prices should move up, ignoring this resistance zone, but that did not happen, and prices close red, and they close below the 60 MA. Now, when prices close 60 MA, that is an indication that sellers are very aggressive, right? And when you already have a scenario from the daily time frame that this is the day where shorting opportunities are more favorable, and then you have the bar which closed below the 60 MA. So that gives you the strong indication, a strong message that this is the right time to probably enter into the trade. So what I did was, as soon as this bar closed below this 60 MA, I took the position below this bar, right? How did I took the position? I bought the put, and it was the 17,400 put of the the Thursday's expiry. So I bought this put here, right? And then I just wait for to trail it. So prices came down, they again start to came back up. I did not exited from the position, because I knew that prices would definitely come down. I mean, in the hindsight, of course, I knew it, that prices would definitely come down. So as soon as prices move back up, and they created a pivot here, right? So this red line was my first stop area, right? So I took the position here, I kept my stop here, and as soon as this pivot was formed, I shifted my stop from here to here, and then again let the prices to wiggle, right, to move around, and then prices again came back up. However, as soon as they crossed above this 20 MA and reached near to the downward or declining 60 MA, they again start to move down back, right? Then what I did was I kept on trailing this prices. I tried to ride the trend. My expectation was that prices would come down further. However, they reverse back up from here. So that was another scenario, but I ride the trend till here. And there is a exit rule that I have created, and I share it with you. So what I did is that, or my rule is that, as soon as I took the entry, and if I have a strong igniting bar, then I try to trail it, right? And I kept my I trail my stop below the previous bar. Or if I have 3 bar in continuation, then what I did is, then I start trailing my stop to the at the low of the previous bar, right? Hope you have understood it. If you have any confusion regarding this trailing of a stop loss, please comment in the comment box, and I will give you the explanation again. So I ride the trend here, and till here I was in the position. However, as soon as this grain bar has formed and it moved above and crossed above this topping tail bar, I closed my trade somewhere here. So this was the trade. Hope you have learned something from it. The purpose of sharing this trade review is to give you an idea that while trading intraday, there are few pointers that you should keep in mind. So first of all, always build the scenario from the higher time frame. Let's see, analyze where the prices are in the daily time frame, and then move down to the 60 time frame, and then move down to the 5 minute or 15 minute, whichever is your trading time frame. So this kind of approach is called a top down approach, where you start analyzing the prices from the higher time frame, and then you move down to your trading time frame. So hope you have learned from it. If you have any questions, please do ask them in the comment box. Right, and I will keep on sharing such kind of trade reviews in future as well. So that's it, guys. Do let me know how you find this trade, and please share the feedback as well. So bye for now. Take care.